Warriors! Good morning, and I'm very, very excited. You know why? Because I pulled the behind-the-scenes team to the forefront. Now, you think that I do this all by myself, you'd be very, very foolish. But I want to start out by saying I'm Coach JB. I'm the top health and mindset coach in the world. What you believe in your heart, you think in your mind will eventually become your words and become your reality. If you can see it in your mind, eventually you can hold it right here in your hands. What you repeatedly do gets ingrained in your subconscious mind. What gets ingrained in your subconscious mind becomes an unconscious activity. Now, that's very important for our conversation today. Now, I wish I could take credit for this, but I'm bringing our research team up to the forefront. We're going to be doing this on a weekly basis as we move forward and helping you guys in the quantum financial system. The first thing that I want to say is we are not financial advisors. None of this is financial advice. We're just a bunch of dudes who really give a shit about people and are trying to help people wake up. As you look this way at a pandemic, there's a whole nother narrative going on this way. And as I always say, nobody knows who the Wizard of Oz is. That's what the movie was all about. You're going down the yellow brick road. You expect something completely different. You pull back the curtain, and it was some little guy with a microphone. Okay, now that's something you really need to think about. What we're here to do on a weekly basis is bring you deep information and knowledge that we've researched and spent about 8 to 9 hours a day researching, and that's all we're here to do. Today, we're going to be opening up your mind to what's called Basel III. Now, as you watch WAP videos, you're worried about Tekashi 6ix9ine, you're worried about the Nas 666 shoes, you're worried about the Logan Paul and Floyd Mayweather fight. There's a whole nother narrative going on this way, and there's a group of us that are working to build generational wealth. And the reason why I say that is because we're moving into the fourth industrial revolution. And the richest people in the world, the people that took advantage from first to second, from second to third, and now we're the people taking advantage from third to fourth. Now, how do we get there? Through knowledge, through information, and through understanding. Because you're going to get a lot of news, but remember, the news gets to you when it's too late, warriors. So today we're going to be talking about Basel III. Now we're going to kick it around the room. They're going to go over a high-level overview, and then we're going to kick questions back and forth to each other. And what we'll do is as we move forward on a weekly basis, we're going to bring new topics to you guys, because it's not just about pump and dumps in crypto, right? This is about understanding what's the why behind it. Why are we heading into this? Think about it. You had a beeper. Now you have this phone. You have headphones, Bluetooth technology. You didn't question that transition, but there's many people questioning the transition. But we're going to go much deeper today. So I'm going to be kicking around the room. So I want to introduce you guys first to my research team. So we got Abdullah, we got Mario, we got Johnny. So this is our research team, and they're behind the scenes. They're also within our academy helping me answer questions. We also have Selman. He's technical analysis. You'll meet him when you come into our academy. And down below, you can join our Warrior Academy, and we help you through the quantum financial system. I'm just going to say this again. Don't take our word as financial advice. Don't make any financial decisions based on what we say. We're just here to give you information. So what we're going to talk about is Basel III. Now, my experiences, I spent 12 years in the banking system. I moved up to an executive banker, vice president. I went to CBA executive banking school, and I learned how to scale banks. What I'll tell you right now, from my knowledge and perspective, banks are in a very tough position right now. Okay, you're in a low interest rate environment. They're going to be having capital issues and also liquidity issues. Now, as banks transition in the new quantum financial system, it's expensive. You need leadership. You need to have the money to build the new infrastructure. And so that's where blockchain technology comes in. But we're going to deep dive down Basel III, and we're going to share with you guys where we're heading. And June is a critical month. That's why we're doing it this month. But I'm going to kick it over to Abdullah. He's going to give you a high-level overview of what's happening in the other countries of Basel III. Abdullah, the floor is yours.
Awesome. So I just want to preface by saying a lot of this is speculation, as Coach already said, but you can't pinpoint where this information is coming from. You can go to sources that are trusted, but there's nothing out there that's definitive. So now that I put that out there, I'm going to go into my conspiracy theories. The bullion banks have been shorting and suppressing the price of gold since the mid to early 2000s with the anticipation of an event like this. So a lot of global banks and central banks have been doing one of two things. If you're on the United States and the UK side, you've been using unallocated gold, meaning gold that is just paper and not backed by anything physical, to short the prices of gold and keep it suppressed at a lower rate, and that increases the US dollar's value, or which the US dollar is the global reserve currency of the world right now. Or you have China, Russia, and India, who since the early 2000s have been buying gold at such a rampant rate that they've now gotten to the point where they want to capitalize on all that buying. So they've been buying at these suppressed prices for almost 2 decades now, and we're reaching a breaking point where we have a liquidity issue. And the liquidity issue can be solved with physical reserves. And this is where Basel III comes in. So China and Russia have been putting pressure on the Bank of International Settlements recently behind closed doors to get this shorting of gold under wraps. So they want to bring in Basel III on June 28th, most likely. And when they bring that in, gold is going to be moved from what's a tier 3 asset, so it's recorded at 50% on reserve balance sheets, to a tier 1 asset, meaning that it's going to be recorded at 100% on reserve sheets. Now you might say, that's great. The price of gold can double. If it's $2,000, they're only getting $1,000 worth of reserves on their balance sheets. But when we get the price increase from the unallocated gold contracts squeezing the price of gold, which is what I'm going to talk about, you may even get these balance sheets to double and triple at a rate that we had anticipated. So that's really what I'm going to speak to. Now, unallocated gold is no longer going to be considered a tier 1 asset. So all of these paper sheets that are out there, and supposedly they're out there at a rate of, for every physical bar of gold, there is 100 pieces of paper out there with equal value on the reserve balance sheets. So those are going to be removed from tier 1, and there will be no more tier 3 assets, as Mario had stated earlier before the call. This is going to strip power from the bullion banks. So they're not going to want to participate in this. They're going to be forced to do this from pressure from Russia, India, and China, who have excess amounts of gold. How much gold do they have? Nobody really knows. But there's speculation that Russia specifically has been accumulating enough gold behind closed doors over the past 20 years that they can fully back their currency with gold and make it essentially a 1-to-1 with reserve, which is what the United States dollar started off as back in the 1940s. So now we look in the news, I'm bouncing around here, but when you look in the news, Russia actually came out earlier this week and said that they were going to be using a new, I just want to get the name correct, National Monetary Fund, where it's worth $185 billion. And this fund, they don't really have to report everything they buy. So they have to report the value and they have to report what they're buying, but they don't have to report the rate at which they're buying it, from what I understood. And that I found to be really interesting, because that's where the conspiracies come in as to how much these countries have been buying gold. So yep.
This is deep, man. I mean, this is crazy. Just to share with you guys, like Basel III, and I know Mario's going to go on a high level overview of what Basel III is. And because you got to understand, you got to look at the timeline, like, and I want you guys to think of history, right? You went through September 11th, you went through a housing crisis in 2008, and now you went through a pandemic last year. But I want you to think, as Mario's going through this, think about history and what's happening, Warriors. So the Wizard of Oz is doing something interesting out there, and what we can do is speculate on what's happening, right? So what he's talking about is going to a tier 1 asset. So banks, am I correct? Banks are going to need to hold gold, actual physical gold, to have the riskier assets.
Yep.
Do you guys realize what that means for banks? That is going to squeeze their capital. It's going to reduce their liquidity, because if they have to take capital to buy the gold, that reduces their liquidity. Liquidity is how they move money. Lending is how they make money, right? So, all right, so let's kick it over to Mario. Let's go. I'm going to unmute you real quick. So we're going to go over to Mario, and then what I'm going to do is pull up his presentation as he's getting started out here. So give me 1 second. All right. All right, Mario, the floor is yours.
All right, Coach. Thank you. All right, so Abdullah did a really good job with outlining the Basel III. So I'm pretty sure a lot of people are wondering, what is Basel and why is it that we have it? So I just went a little bit on overview as where Basel came from. So Basel comes from it's the Basel Committee on Banking Supervision. The Basel Committee on Banking Supervision is an international committee formed to develop standards for banking regulation as of 2019. It is made up of central banks and other banking regulatory authorities from 28 jurisdictions, and it has 45 members currently. So essentially, it's a forum. They just want to provide banking supervisory matters. Its objective is to enhance understanding of key supervisory issues and improve the quality of banking supervision worldwide. So Basel, up to now, we spoke about Basel III, but there's 3 accords. There's the Basel I, which was issued in 1988. We've got Basel II, issued in 2004, and now Basel III, issued in 2009. So let's go just a quick overview of what Basel I. So Basel I was the first accord to come about, and Basel I is the classification system, groups of banks' assets into 5 risk categories classified as percentages: 0%, 10%, 20%, 50%, and 100%. A bank's assets are placed into a category based on the nature of the debtor. So 0% categories comprised of cash, central bank and government debt, and any organization for economic cooperation and development, government debt. Public sector debt can be placed in the 0%, 10%, 20%, or 50% category, depending on the debtor. Development bank debt, OECD bank debt, OECD securities firm debt, non-OECD bank debt, under 1 year of maturity, non-OECD public sector debt, and cash-in collection comprises the 20% category. The 50% category is residential mortgages, and the 100% category is represented by private sector debt, non-OECD bank debt, maturity over a year, real estate, plant and equipment, and capital instruments issued at other banks. So basically, Basel I, the bank must contain capital, which is Tier 1 and Tier 2, equal to at least 8% of its risk-weighted assets. This ensures banks hold a certain amount of capital to meet obligations. So just a quick example. For example, if a bank has risk-weighted assets of $100 million, it is required to maintain capital of at least $8 million. Tier 1 capital being the most liquid and primary funding source of the bank, and Tier 2 capital including less liquid hybrid capital instruments, loan loss and reevaluation reserves, as well as undisclosed reserves. So now just a quick overview, Basel II. So this was the second accord that came to complement Basel I. Basel II is the second set of international banking regulations. There's three key, which they actually call them the 3 pillars, and it's the minimum capital requirements, supervisory review, market discipline, and that's, if you want, there's a lot of information. You guys could always just pause the video and go over everything, but just basically they wanted to, this came about to prevent, what do you call it, a crisis in the financial system. So that's why they developed those 3 systems. Sorry about that.
Yeah, no,
so
think about, I don't mean to stop you, but like you talked about,
yeah.
think about the dates, 1988, and then what happened in 2001, and then 2004, and then we had a collapse in 2008. Look at the dates, Warriors. Pay attention. Okay, sorry. It's exciting.
So Basel III Accord is a set of financial reforms with the aim of strengthening regulation, supervision, and risk management with the banking industry. And like Coach was just saying, due to the impact of the 2008 global financial crisis on banks, Basel III was introduced to improve the bank's ability to handle shocks from financial stress and to strengthen their transparency and disclosure. So with Basel III, the minimum capital requirements changed, and the Basel III Accord, they raised the minimum capital requirements for banks from 2% in Basel II to 4.5% of common equity as a percentage of the bank's risk-weighted assets. There's also an additional 2.5% buffer capital requirement that brings the total minimum requirement to 7%. Banks can use the buffer when faced with financial stress, but doing so can lead to even more financial constraints when paying dividends. As of 2015, the Tier 1 capital requirement increased from 4% in Basel II to 6% in Basel III. The 6% includes 4.5 of common equity Tier 1 and an extra 1.5 of additional Tier 1 capital. The requirements were to be implemented starting in 2013, but the implementation date has been postponed several times, and banks now have until January 1st, 2022 to implement these changes. The leverage ratio with Basel III introduced a non-risk-based leverage ratio to serve as a backstop to the risk-based capital requirements. Banks are required to hold a leverage ratio in excess of 3%. Now, this is sounding like a lot of information. This just goes into detail with all the percentages, all the things that the banks are having to do now in order to back it up. So to conform the liquidity requirements, with Basel III introduced the usage of 2 liquidity ratios, the liquidity coverage ratio and the net stable funding ratio. The liquidity coverage ratio requires banks to hold sufficient highly liquid assets that can withstand a 30-day stressed funding scenario as specified by the supervisors. The liquidity coverage ratio mandate was introduced in 2015 at only 60% of its stated requirements, and is expected to increase by 10% each year until 2019 when it takes full effect. So now Abdullah already pretty much covered the effects with the gold, but I just kind of put a rundown. So the Basel III regulations now treat gold held by central banks in their own vaults or on an allocated basis as equivalent to cash. So it's a low risk asset. Since 1994, gold was considered to be a tier 3 asset with a 50% risk weighing assessment. This meant that central banks could only apply 50% of their gold reserve value onto their balance sheets. Now, under Basel III, gold will qualify as a tier 1 asset. And I actually read somewhere that tier 3 is being completely removed from Basel III. So we're just going to have tier 1 and tier 2 assets. So this is going to be great. What this should do is increase demand for physical gold for central banks, as it now has a favored value status for bookkeeping purposes. There is evidence to support this, as of 2017 was the largest buying of gold by central banks in 50 years, approximately 651.5 tons, which coincidentally was the same year the announcement of gold becoming a tier 1 asset under Basel III.
Yeah, this is interesting. Like, think about this worst thing. So imagine you own a bank, right? So let's make it simplistic. You own a bank, and you now have to go from paper gold. Now gold's gone to tier 1 asset, right? And so so it's 100% value now. So you have to go from paper to physical gold now, physical gold, right? You're in a lower interest rate environment. We're squeezing your profit margins because you're in a lower interest rate environment. Where do you make your money? Interest and fees, interest and fees. And we should have talked about this in the beginning. Banks don't even have your money worth. It's called fractional reserves. If you don't keep the lending machine going and the borrowing machine going and the printing machine going, it will collapse, right? So as they give us more money, we're supposed to put it into the system. When you lend out $300,000 in lending or lend for a home, that's $300,000 in salary. So what this is saying, in order to be more profitable, you have to have gold on hand to have those riskier assets. If you have a riskier asset, you have a higher profit margin, right? So what it's doing in the YouTube video I did about a week ago, I showed you guys that perception of America based on banks. I said that smaller banks are really going to struggle with this, right? And it's going to be the banks that custody cryptocurrency, the banks that actually move into the quantum system, because money needs to move a lot faster now. They need liquidity. They need to move throughout the rails. So awesome job. So we're going to go ahead and move over to Johnny Crypto. Let me unmute you here. The floor is yours.
What's up, Coach? Thanks, guys. So, yeah, interesting stuff. Really good thing there, guys. Thanks for bringing that up. Well, when we look at this whole new regulation that's coming along, the first question you ask yourself, okay, what the heck does it mean for me, right? Because at the end of the day, a lot of things happen all the time out there, and a lot of times folks don't really realize what that means to them. So let's kind of look at it holistically from the different players involved. So, you got your little banks, you got your larger banks, and then you got us, the consumer. So if you look at it from, the larger banks, the central banks, as you saw from Mara's presentation, the reality is they've already got the gold, and if not, they'll buy what they need remaining, but their balance sheets are going to double, right? So if they had $100 million of gold on their balance sheets, now they've got $200 million, because it's going to go from 50% to 100%. They instantly have just doubled the value. So imagine you have a house, and today you thought your house was worth 200 grand, and guess what? Tomorrow you find out, holy crap, it's worth 400 grand. You're richer, you're happier, right? Well, so are the big boys who have these. So that's the impact to them. Now, because they got more money on the balance sheets, as Coach just told you, the more money they got, the more money they can loan out. So now, and it's a fractional reserve system. So for those of you who don't know what that means, it means I think they can loan 10 times more than what they have. So for example, if I got $1 million, I can loan out 10 million. So if I just double my balance sheet and now I got 400 million, I can loan out 10 times that, right? So think of what it means for them. It's just huge. If you're a bank, if you're a big bank and you've got the money, you're happier you're happier than, you're very happy. So now let's look at the smaller banks, the little guys. Those little banks, they got to go buy this gold. They've got to meet that demand. And as Coach said, they don't have liquidity. Banks don't have your money, contrary to what many people think. I always thought banks had all the money, but no, they don't. This fractional reserve system means they get it and they send it right out the door. So they don't really have the money to buy this. They got to go scratching. They got to go figure out how we're going to do it. That's going to be a major, major impact. So don't be surprised if you see a lot of your local banks either going out of business, closing their doors, or potentially, you know, not being able to be able to place, you know, different types of investments or risks. They may not be able to do as many types of riskier lending. So you'll see an impact to them there. The fact that they've got to hold higher capital reserves just means that it's going to reduce their balance sheets and reduce their profits in the long run. So what are they going to do? If your profits go down, guess who's going to end up paying for it? You're looking at us. Yeah, it's us. Because what are they going to do? Banks are going to be forced to increase what's called their lending spread. So that's the difference between the money they borrow versus the money they loan to us, right? And they keep the difference. So they've got to increase that spread to increase their profits. So what does that mean? That means you're going to be paying higher rates for loans, car loans, mortgages, things like that in the long run. So you can kind of see it. It's going to help the big banks, and it's really going to screw the little guy, or at least that's my interpretation of what we think it means in terms of how Basel may impact us in the long run. And building on top of that, for many of you XRP folks out there, if you're holders, you've probably heard the term XRP 589. XRP is going to 589. We all hope Bart Simpson's right. Don't get me wrong. But at the end of the day, what we really potentially, another potential possibility is that the 589 really means the COMEX 589 rule may finally come into play. So if you're sitting there, you're like, what the hell's the COMEX 589 rule? I didn't even know what it was either until we started doing some research. And what we learned is back in June of 2014, there was a rule passed called COMEX Rule 589. You can actually go look it up online. But basically, I'll give you just in a top nutshell how it works. Primarily, it's kind of the way they control and manipulate the value of precious metals. So, for example, let's say there's the bidding on silver goes up, I don't know, $3. And let's say there's nobody willing to buy it at that price. Well, what this rule says is if nobody's buying it, we're actually going to pause. We're going to stop trading for 2 minutes. Then what they do is they resume that trading, but they can come back at a higher price. So it'll come up, for some reason, it seems to be in 12. So the price can go up as high as $12 more. And basically, they're trying to create a market to get it moving. And again, if it doesn't move without, if that market price closes at that day without what they call fixing, then that means no one will be able to buy or sell physical silver or gold. So the next day, what happens is the same scenario will be in play. The auction will resume in the morning when the market opens up. But here's what they do. If it closed yesterday at $12, they're going to open it today at $24. And if no one buys then, the same thing will happen over again. The next day it will open up at 36. So you can see how really quickly, you can actually see the price of silver and gold moving up. Now think about this. If all these banks, and I'm speculating here, but if all these banks now need to hold gold, they can't sell it because the rule says they got to hold it, right? Now you're holding gold. There's less gold on the market, less willingness for people to sell it. So what happens, this rule can come into effect, and you can just instantly see how gold and silver can skyrocket higher and higher and higher until it finds a point where, the weak hands, or I should say the strong hands, are willing to sell it. So, when you put it all together, you can kind of see big banks getting all the money, little guy getting screwed, and the price of gold and silver probably skyrocketing. So if you don't have any silver and gold, this is not financial advice, but who knows if we're going to see these prices too much longer. There's a potential that if this all comes to play, you may see huge skyrocketing prices in precious metals.
Yeah, if you think, God, this is amazing. So think about this too, the CBDC narrative, right? So CBDCs are coming. So CBDCs are going to pull us closer to the central bank. So what's that going to do? Again, it's going to move it away from the commercial banks. So now you'll be holding, so the flow just goes from CBDC to what would be custody, right? A global currency custody, and then right to the consumer. So these banks, so think about this, just think about it from a banking perspective. You're a CEO of a bank. Are you just going to sit on your hands and just wait for all this to happen? Or are you behind the scenes, like Bank of America in 2018, actually getting patents in cryptocurrency custody, JPM coin, Jamie Dimon, you know how I feel about him, but the guy's a genius, man. He was already building the JPM coin behind the scenes. He was telling people to get out of Bitcoin when they were buying Bitcoin, all this different stuff, that's speculation, but we see what happens within the marketplace. So these CEOs aren't just sitting on their hand. They're making moves. I'm a CEO. I'm making moves 5 years down the road for this company as we move into the quantum system and how things operate, right? So I'm going to circle back to Abdullah. I know you had some more to add to the conversation. Put you on mute. Go.
Yeah, so what this all comes back to is the United States dollar being removed as the global reserve currency slowly over time. That's what my belief is. So with the IMF, we're always following the IMF, the World Economic Health Forum, and what the IMF came out and said on May 5th was that the US dollar needs to be replaced as the global reserve currency. Now, they didn't come out and directly state that. What they did is they published something about gold reserves and snuck that line in right at the bottom of the article. So I was able to pick up on that. But what it said in that article was how central banks have been accumulating since 2000 with the anticipation of something like this. They knew this was coming. This was always part of the fiat system, that it would come to this inevitable crash. And people who run the system and created it obviously have that awareness. Now, the United States reserves held by central banks in US dollars was as high as 75% in the mid-1990s. Today, we're below 59%. As of May 2021, we're below 59%. It's not a coincidence. So the lowest levels in 25 years, we've got the Basel III coming out, down 12% since 1999. And I have a great quote I want to read before I toss it back to Coach. It said, the IMF came out and said in this article, the fact that the value of the US dollar has been broadly unchanged while the US dollar share of global reserves has declined indicates that central banks have indeed been shifting gradually away from United States dollars. And then the next line that follows goes, if true, we can anticipate further diversification of our currency composition of reserves, meaning that they're going to start adding the euro, the Chinese, I'm not great with the names of the currencies, but the Russian currency, the Indian currency, whatever their basket of goods is consisted of, they're going to decrease the US dollar from that 75% ratio and gradually increase the other currencies up to meet that mark. And that's basically what I want to talk about.
Right, and that goes into the SDR, right? Pulling them into the SDR, and then we'll have, and then a lot of people aren't paying attention to this, but the SDR started their own printing machine. They moved it up to the SDR. So not only printing at the central banks, we're now printing at the SDR, which is, it's like they put us in a car, we're going full speed, and they're just crashing this economic system to move us into a new system, which is going to be the central bank digital currency. It's going to bring us closer to central banks. So if you're a banker, like I said, you're sitting there going, okay, we either need to evolve. It's a blockbuster moment for banks, basically. And what that boils down to in Blockbuster was leadership and capital. It wasn't just Netflix. They just didn't have they didn't allocate their capital correctly, and they didn't have the right leadership and foresight to move them into that. So the banks that have good leadership and capital are going to survive this. And so where does that go back into, we'll open this conversation. We got about 5 more minutes, but I want to talk about, so as a consumer, think about what's happening right now. So Warren Buffett, right? He closed out of Chase Bank. He closed out of, I think it was PNC. Don't quote me on that. There's a lot of banks that he closed out 100% of his portfolio, but he increased his position in Bank of America by 10%. Bank of America in 2018 actually has a patent for cryptocurrency custody, right? Bank of America is also connected to Ripple. We know we're huge XRP fans here. But also, you think about this, Warren Buffett, it just came out, was yesterday, that Berkshire Hathaway invested $500 million in Nubank, which is a digital bank, which deals with Bitcoin, right? Maybe he's not directly going into Bitcoin. Ray Dalio, when I did a video last year with Ray Dalio in it, I put it not with him in it, with a video talking about it. And people are like, why did you put Ray Dalio? He's against cryptocurrency. I'm like, no. And then all of a sudden he says, hey, I got some Bitcoin, right? And so why are people doing it? So why do you guys think that big money is moving into crypto, gold, and silver? What is your guys' opinion on that?
So what I thought was interesting was how, when you were talking about Blockbuster, and then I'll kick it over to Johnny Crypto, when they first heard about Netflix, they criticized it relentlessly. They used to and said, there's no hope here. We've got the infrastructure. We've got the businesses. There's no way this is taking over. Nobody wants to watch a movie at home on their TV. There was all sorts of narratives. The same idea is playing into crypto. And you know who's investing? The same people who were criticizing it.
100%. Yes. We'll go to Johnny Crypto.
So if you look at throughout the test of time, there's only been really one true currency. I think we all know what that is, right? Go back to the days of Jesus, even before. Gold and silver, boys. That's all it really is at the end of the day. What is fiat? It's just this piece of fake paper that we all agree that has some value, and that's why we trade it. But the reality is, as the world moves towards coming off of the dollar standard, Coach, what's going to happen, in my opinion, is you're going to see the value of the dollar, which has almost lost all of it anyway, is just going to continue to fall even more. Yep. The elite, the big boys, the smart guys, they know this. They're not holding cash. They don't want to hold cash. Why do you think that? What are they buying? They're buying crypto, and we know they got gold and silver. At the end of the day, when you're thinking about where to, as the new system is coming in place, you want to make sure you're invested in that system as it's coming or as it's getting there, and the old one goes away. You don't want to be in that old. That's a sinking boat, right? And so that's why I believe these guys see it. They know it's coming, and they go and they put their money into those safe allocations. And frankly, as us for consumers, like you've always said, Coach, don't do what the big boys say. Do what they do. And this is what we're watching. We're watching where they're going. That's where they're putting their money, and that's where I'm putting my money. I'm just following the big ship. I'm a little tiny ship. We want to follow the big ships and do what they're doing.
If you look at it too, like I've been studying the World Economic Forum for a long time, and they signaled this cyber thing's going on right now. It's like he told us in 2018, like, hey guys, here's what's coming. Here's what's coming. No, we already told you. Don't act like we didn't tell you. You just weren't paying attention. You're looking this way at a media. You're watching the Kardashians, and I bring up the Watt video. The reason why I bring up the Watt video, it has billions of views. It makes me sick to my stomach. And then you watch some of these videos that we're doing research on. They have 100 views, 200 views, maybe 20,000, right? And it's the most important time in history. But this, as God says, this is nothing new under the sun. This has happened over and over again. And we're in an opportunity right now where we can wake up as people and become the new uncommon 99%. You can do that. But the thing is, God says there's nothing new under the sun. There's only going to be a short group of people, a small group of people that's going to believe in this, that's going to move forward. And there's going to be a group of 97% or 99% that are going to be on the rocking chair and be like, oh, I heard about that crypto stuff. And but I know, guys, we're about 31 minutes right now. So what I will promise you all is that we're going to continue to bring this type of deep knowledge and information. We are not financial advisors. None of us are, right? We're not giving financial advice. What we're doing is we're just giving you the information. We spend 8 to 9 hours a day researching. This is our research team in the Warrior Academy. We also have our technical analysis team where he spends about 12 hours. I don't think someone sleeps. Spends about 12 to 16 hours a day researching. Yeah, what we do is we're just really passionate about helping people. That's what we're passionate about. So if you want to join our private Warrior Academy, you can click the link down below in the description. But we're going to come on a weekly basis, bringing you new knowledge outside of pump and dumps, and you're going to make $1 million in crypto. Now, if you want to get rich quick, just go to the gas station, buy some lottery tickets, get some scratcher tickets, and sit in your car and enjoy it, or go to the casino. We're not here to teach people to get rich quick. We're here to teach people the fundamentals and the foundation of economics. Understanding your schooling system did not teach you economics. It taught you how to be just over broke, collecting a paycheck, right? In order to be an entrepreneur, you have to have an entrepreneurial mindset. You can't be in that just over broke type system in your mind. It's okay to have a job, nothing wrong with that. But it's what do you do with that money that you receive, right? You're supposed to be abundant. There's nothing wrong with money. It's the love of money that makes it evil, that they say, right? So I just want to say I appreciate you guys so much in front of everybody. These guys are the reason why we're helping you get all this information on our YouTube channel. I want to say thank you to you guys for your support, your love, and any last words from any of you guys? No, I'm good. All right. Appreciate it. All right, we're gonna keep rolling. I love you guys, and as we always say, Warriors rise. Y'all gonna need to get shit together.